All right,
Set it
Chris,
on
what's
fire, Jay.
up?
We're
It,
setting it on fire over here. Lighting this candle. I love it. I'm uh,
yes.
I'm excited to talk to you today.
Guess what,
Our
Chris?
show. What am I guessing?
It's
Just like
Tuesday.
Jeopardy. Oh, I should have said what is Tuesday? No, that is
Yes.
today.
Yeah,
It's
there you
Jeopardy
go.
or something. That would be too
Keep
funny.
it Jeopardy style.
Um, yep, absolutely. I'm excited to be here today, Jay. Obviously, because we're talking about some super fun topics. Welcome everyone to the Practice Playbook, the show where we help firm owners and wannabe firm owners navigate the road for their modern firms. I am Chris Geno. He is Jay Kimelman, and we are here to talk to you about all things to help make your firm better. Last week, we actually summarized what it means to be an advisor. We talked about the what's, like what advisors do. We talked about the hows, some of the things that you can think about as you're running your own business, and the whys of why advisory can be valuable. And then past that, we highlighted a few things that you can do right now in order to introduce advisory into your firm. Today, we're back to talking taxes, kind of, but not in the way that if like 5 years ago, if I told you in 5 years, Jay and I are going to talk taxes, you would have never thought we were talking about them this way. And that's right. This week we're talking about DOGE and what all the stuff that they're doing is doing to uh, tax practices, tax advisors, as well as the common folk. We're gonna change up the way that our show goes. We're gonna cut the news out into a newsletter or a blog post that you'll be able to see on the HRA website later on. So look out for that. I'll post that also from my socials since I'll probably coordinate getting that posted. But so no news to Jay. The PCAOB, they're off the hook. Um, they're not making the news today because
Oh
there's
boy.
there's no news. But maybe the PCAOB will be off the hook forever because of some of Doge's activities. So let's get into this. For those of you who could, I don't know how you could possibly not be aware of this. Are you living under a rock? Um, but as part of this new administration, um, the administration has given the green light to some consultants from the I don't know whether it's aptly named or not, but the Department of Government Efficiency, which is just a set of Elon Musk and his homies who are coming in to like wreck shop on stuff. Um, at least that's the way that it appears. They've uh, supported or pushed forward a lot of changes in personnel in a wide variety of government agencies, at least so far. Some of which have kind of looked like really big blunders a couple days later. So there's a lot happening there for sure. This week, they turned their eye to the Treasury Department and more specifically to the IRS and their operations. And so that's the whole point of our show today is to talk about what that means, why this matters both to taxpayers like me and tax professionals like Jay, um, and uh, and then also, of course, you and your clients. So Jay, as we introduce this topic, what do you think? There's more to talk about there.
Oh, I think there's plenty to talk about, and you know, yeah, it doesn't matter where you land politically here because the IRS
Yeah,
touches every one of us. Some of us in
that's right.
multiple ways. Some of us have our individual returns. We have multiple businesses, or we are a service provider providing professional services of tax preparation, tax resolution, tax planning, etc. And it the how do I put this? The IRS has been a basically a, a volleyball going back and forth for both parties over the last 10, 15 years. And, at this point, we finally had an investment into the IRS and we were seeing significant increase in systems that they have, efficiency, and just getting things taken care of. They were answering the
Yeah,
phones, they were getting things accomplished. And at this point, I had a conversation today with another practitioner, and they're like, "Yeah, we're going back to putting everything either in trailers and then shredding it or burning it because they're not going to have anybody to open the mail, or they're going to just turn on the automated uh, letter system, and the letters are going to come out, and there's going to be nobody there to respond to it. We're going to get the letters. We're going to all be concerned. We're going to all freak out. We're going to make a call, and oh, the phone line's too busy to answer. Call back tomorrow. Gotcha. So that's what we want to talk about today. Talk about what's up, what's down, and what we can do as practitioners to prepare ourselves, and what the possible impacts are going to be to our clients, and how we can prepare them for some of this as well. And going through and setting this up, there are going to be some other consequences across the board. So let's let it rip. Let's pull that Band-Aid off, or as I said,
all right. Well,
let's light this candle.
Let's light this candle. They, like I said, they already lighted the candle up in DC, ready to go, going crazy. Now, when I think about government efficiency, right, like there are some things that I think would be really valuable, and maybe those are things that come out of this this evaluation as well, right? Investments in technology are super powerful because they do allow people to file more timely, to file easier, to keep good records and be able to see their records. Like there are lots of values in identifying areas for efficiency. What we have seen so far is that the DOGE group, they make a lot more change, mostly in the terms of cutting people. At least that's what we've seen so far. And for the most part, I think, Jay, most of these folks are either provisional people or relatively new people. But in some cases, that means that they're people with a lot of experience. And certainly in the case of the IRS, they're people that are there with a very specific intention, which is to help tax professionals and taxpayers to get questions answered and things resolved. So if we take those people away, go ahead, Jay.
And what I know is there's about 10 to 16,000 people that are considered probationary. And these are people that have been there a year or less, or have been promoted in the last 12 months.
Yeah.
So you have a lot of good people that have been promoted that are on probation for their new positions that are going to be eliminated. So that's 16,000 jobs there. And then apparently the call also went out that if you went remote or you were hired to be remote, they want you to report to an office. So there's people there that we got to look at, and I don't know what the numbers are for the work from home people, but that's going to be impacting the work staff as well. So
right, and again, keep in mind that these folks are there with the intention of trying to resolve issues, trying to make sure things are taken care of. So if you take those people away, 16,000 of them, and I don't remember, I saw somewhere the total, but I don't remember what the total was. This is something like this is a very good sized portion of the IRS's workforce. So we're not talking about like 16,000 out of 1 million people or something, right? This is 16,000 out of maybe 100,000. So it's a pretty significant chunk. And so because of that, when you start to extract those people and when you start to pile on that workload in other spots, right, there are going to be operational challenges that we'll face. And so those are some of the things that we want to start with today. And I think that starts with the compliance version, right? You're going to need to make sure that you're taking steps to include additional documentation, and also to ensure that you've got some fraud prevention measures in place, right? We talk about that a lot here. That's something that you want to be doing on the backside anyway. Like you want to have good cybersecurity in place and all of those types of things. But these types of measures may require more time per return to help do these things now because there's just less folks available, right? Jay, you mentioned this before, but in the role as a tax professional, oftentimes you're not just providing tax advice. You're also providing therapy, and when there's misinformation and anxiety associated with like, oh, what's going to happen now? What do I even need to do now? that often comes, especially when it's related to taxes, that comes to the tax professional. And so I think you'll find that this client anxiety and the misinformation around what's actually happening is going to require us as accounting professionals and tax professionals to educate and reassure clients, which is going to add time to those conversations, right? It's going to mean more
Exactly.
effort. You're gonna have to write up a new blog or an email response to everyone, um, because of all of that, right? What do you think, Jay? What other things are going to be operational challenges as we see what happens here with the smaller staff?
Well, I mean, to me, the biggest issue is going to be getting through on that phone to resolve
Right.
issues, and you know
Yeah.
that ultimately is the number one thing that we do to communicate with them. Uh,
Yeah.
they, like I said earlier, they've made tremendous strides over the last 2 years in technology, and it's been amazing to watch that. But to watch it backslide because there's first of all nobody watching the store. It's going to be interesting. But some of
Real.
the other things, um, some of the other things that the IRS does that we might not know about is they also are watching for fraud that
Mm.
might be coming from terrorists. In the last 2 years, there were, let's see, I'm trying to see, they broke up operations that that were a result of terrorist financing, child exploitation. They sanctioned individuals, and they are responsible for breaking that all up. So that makes a
Right.
big deal. And we don't think of the IRS as a law enforcement agency, but they are the ones that are able to track this information, and they have a critical role in national security.
Yeah. Right. Absolutely. And I think that that's an like, again, a lot of times people think about the IRS as the people who do your audits and the people who send all this paperwork, or like we've kind of talked about, the people who resolve these issues. But the reason why those computer systems are so old is because there's a lot of information on them, which
Yeah,
is exactly what you're talking about, right?
yeah,
All of that technology, all of that cybersecurity, can be more complicated. And then we talked about this last week, I think, as the DOGE guys got some access to the Department of Treasury. Um, they have some access to our own, like, potentially some access to personal information and personal data. And so because of that, like that, those other cybersecurity risks that go along with sharing that information and being around that information are things that you're going to need to watch out for, because there may not be somebody on the IRS's side doing that. And so that's right, Jay. That's another point to think about of what kind of challenges this might result in.
right.
Um, and then of course, I think it's also really important to know, like, when there's extra activity happening, that means that you need more reviews and more checks in place, especially if you don't know exactly what the outcome is going to be from the IRS's side. If they're going to just randomly send a letter because you put the name on it, slightly wrong or something like that, right? This extra check of making sure that everything is in the toppest of notch order, can be really important as well. Um, it, I think that there can be, like, lots of operational challenges that arise like this, and there may be some that we just don't even think about right now, that come up eventually. Jay, are there others that you wanted to talk about as we think about what's going to happen to tax professionals and firms in the upcoming year?
Yeah, I think that as this takes place and as we start to hit a new norm, we're we're going to see where the taxpayers aren't really sure what's going on, and they are
Right.
going to end up reaching out to us. And I foresee tax advisory growing out of this and
Yeah.
becoming an additional expense for the taxpayer. I mean, it's an additional revenue source for us as practitioners, which is a good thing.
Sure.
But
Right.
we want to make sure our clients are getting value, and they're getting value by us helping them pay the least amount of tax to keep more profits, not to keep them from being scared or keep them from the unknown. So that I think that's
Yeah.
going to be a big thing. And I also think that it's going to drag out how long it's going to take to get refunds. You know,
Yeah.
everything's going to slow down, and whether it's checking a box or clicking a button or making sure it's going through, even though we're e-filing, I think it's going to slow everything down. And I mean, if you're looking to save money, I mean, if you slow down the payments and keep the money in the bank longer, you're gonna shave off a little bit of interest there. Every little bit helps,
Yeah.
but I mean, ultimately, you know, right now the timetable is approximately every 3 weeks from file to refund. So if you are
Yeah.
going to paper file, I would anticipate that time will probably triple.
Whew.
Yeah.
That's
Basically,
not great, right?
basically what
And
I said earlier. You're going to send it in. It's going to hit the mailroom, and there's going to be nobody there to open it. And then from
yeah,
there, it needs to be scanned. It needs to be processed. They got to key some of that. So there's a lot of manual steps in paper filing. And if you are doing that, or if you are doing paper amendments, it's going to take even longer.
yeah, no kidding. And so those are things to watch out for this tax season only, right? If you then like continue to think on out toward the future, Jay, you already mentioned this, right? I think that we will continue to see a shift toward advisory services because there's just going to be there's going to be some more flexibility potentially, but on top of that, like it's going to be that much more important that
Mm-hmm.
you get it right the first time, so that you don't have to worry about it going forward. Like that the idea, the concept of just being a tax prep firm is going to like start to limit some, right? It's just not going to be the future because you're going to have to be able to offset the costs of some of the things that we talked about already, the
Right.
extra phone calls that you're having with people to talk them off the ledge, the extra time that it takes to put in even extra layered diligence related to preparation and the time that it takes to fill those forms out, right? Like that would be the same with any type of change
Yeah.
in the policy, but knowing that you're going to have this extra effort that you're going to have to put in order to make sure things are happening, like that means that you'll see these the pricing change,
Yeah.
right? And I think that's the second thing that you'll see happen is like if big folks like our good friends at Intuit, maybe that's a good friends, whatever, right? Or the folks at H&R Block, if they start to raise fees, right? That's just going to be a thing that goes across uh, across the whole
Yeah.
landscape, right? Everybody's going to start to see fees changing. And when things take more time and all of that kind of stuff, that's exactly what's going to happen. There's no question. um, an interesting like opportunity, Jay, like you mentioned too, like this advisory work, like another area that could like start to highlight or come up more frequently potentially is IRS representation as a revenue stream. Like
Yeah.
if these types of situations start to become more frequent or anything like that, you'll have the opportunity to do this. Jay, is that something that tax practitioners should be focusing on now, or what do you think about that?
Well, there is a really good subset of tax practitioners that are doing resolution work now.
Oh yeah, okay,
And
yeah,
yes, and they specialize only in doing tax resolution work. I think
mm,
that's going to pick up, and whether you do it or you refer it to somebody to do it, either way,
right,
it's going to pick up across the board. And the thing about it is, if the true reason for doing this is to cut down on fraud, I
yeah,
would suspect that audits might go up because, you know, that's how they detect fraud is by doing audits. Now,
yeah,
actually, that's not true, but there are systems in place that use specific analytics that actually detect the fraud. And what's
mm,
going to happen is they're not going to have the human intervention to go with that technology to detect it. So
Yeah.
it's possible that audits are going to go up because the human intervention wasn't there and it was falsely triggered, or it's going to go up because, well, there's not enough people, so yeah, let's just audit anything that comes out of the system. So yeah, there's going
Yeah.
to be an influx there as well. So we just got to watch out for that. Now, I know that kind of goes against what President Trump wants because he thinks there should be less audits with the IRS. But
Yeah.
that's another story there. So the system is the system, and human intervention is a whole other animal. So
Right.
yeah.
Well, and then, like you mentioned, the president has his own agenda, and especially with the new potential tax law that's coming down, tax firms, tax professionals, you have to stay agile in this time, right? You've got to be ready to respond to potential IRS rule changes, to things that may change very quickly and without warning, and that's I think that feels like a pretty high level synopsis of what's going on right now. Things are changing rapidly and without warning. And so you as a tax firm and a tax professional need to be able to do that as well. I don't know exactly where this information came from, like the numbers here, but small business and complex returns could see like a 50 to 30% price increase due to the additional complications. And the representation services could be like a pretty substantial like portion of a portfolio because they can take a lot of time and a lot of effort. So those are definitely things that can be future impacts in that area. Jay, we've kind of talked at that at a really high level, right? Like, what are things that as you're in your role, right, as a tax professional that would love to not have to do as much tax, right? Like, how do you feel about this? Is this a thing that couldn't have come at a worse time, or what are your thoughts?
Where the accounting profession is today. I mean, actually, we talked about this last week or the week before. We had
Yeah.
a slight increase this year in people entering college. What was that? What we discussed? We had more people entering.
It was last week. Yeah, it was
Last week entering education for accounting. But
Yeah.
we are at the point where we are losing more people here, and it's like
Yeah.
this isn't the best time for it. But
No.
if it wasn't this, we'd probably have a sweeping tax change, and we wouldn't be ready for that either. So it's like we just got to take it on and deal with it, and just deal with it head on, and put it to bed, and just take it as it comes, and take care of it with our clients, and make sure we're taking care of them, because that's what it's all about, is making sure our clients get what they need. Now, yes,
right.
They're going to pay more, and they have to understand that. And unfortunately, that is the times we are in. We have inflationary times. Prices are still rising. We are heading for tariffs, so prices are going to rise more. And as a result of some of this, there will be additional costs that we did not anticipate. So,
right.
It's just one of those things that we just gonna have to deal with at that point, and it's just there. We can't control it. So
right. Yeah. Yeah, and so I think that's a really good synopsis too, right? Is that when there is uncertainty like there is right now of exactly what the outcome is and what happens next, the most important thing is that you're communicating to your clients as frequently as possible, and that you and your firm are staying agile in order to be able to respond appropriately to whatever actually does come down, and be able to see those next steps through the process as you can react and work on them, right? Jay, I saw as I was doing my normal research for the news, there was like a very interesting thing that happened at the IRS. The Senate Finance Committee actually voted to approve a couple different rules that make IRS administration a little easier, or at least they're intended to. And so it is funny that that Congress certainly seems to, support the IRS and want the IRS to be able to give taxpayers what they need. A couple of these rules were around when you file an e-file, like if you e-file by midnight, you're still good to go. Like it's called is it the mailbox rule, Jay? Is that what it's referred to as?
So, yeah.
Yeah. Where once it gets in the mailbox, you're good as long as it's in the mailbox, no matter when it actually arrives. It's the postmark rule.
Yep.
And then they also had one that would portion of the bill that would require the Treasury Secretary to establish a policy to make sure that if there are like math errors, that the taxpayer actually like got to know what those math errors were. Like, oh, okay, we blew it here, and here's why you're getting this notice, right? Which those things are really valuable.
Yeah.
There's also like a fraud enforcement portion to this too, and so there's like all this extra administrative stuff that's seeming to like be pushed by Congress, but that now there's going to be less people to do, and so it seems like those two things are very much at odds. So that would have been great news before we start laying off a whole bunch of the IRS team.
Yeah, the timing is really interesting.
Yeah, I mean, I think that was passed like last week.
Yeah.
So it is interesting that that's happened. So much so. For individual taxpayers, right? Like, so if you're advising your clients, there are a few things that we think are important to make sure that you're highlighting for them as well. Outside of just all the considerations and concerns around your firm. Jay mentioned this one before too, like there's definitely a variety of right now impacts that might happen. And Jay mentioned like refund delays, IRS disruptions, like layoffs and processing slowdown. Like layoffs inherently cause processing slowdowns. And that means that there can be delays. And so that's another reason to communicate to your clients all that, right? The earlier you get in, the better you'll be in this situation, right? Like all of those different types of things. You want to make sure you have really effective communication around this, so that your clients know that that's a potential issue and a thing that they need to be aware of.
Now, you pointed out that earlier you get in, the safer it is, because if you file your return ahead of somebody that might be trying to file a fraudulent return on your account.
Right.
So that's wise, sound advice. But and the opposite of that is extending your return, to go back to what you said earlier, to know what you have on your IRS file, because you can pull a transcript and then file your return. Having that information, that way you're not missing anything. You're not going to cause one of those automated letters to come out, and then you're like, what's going on there? So, that's it's equally as important, but it's like you got to weigh out the fraud aspect versus having everything in there. So,
well, and I think that like that's really good advice, and that again shows the difference in perspective of me as just regular taxpayer and you as tax professional, because you're thinking about those things, right? And those are things that you need to communicate to your clients, and that's exactly where you can be able to provide good value of like, here are the reasons why this would be powerful, or and alternatively, like maybe you don't want to do that, but you want to do this instead. Like that can be really, really important, and it's good advice, and a thing that you need to think through. Like you want to make sure you have all the information that you can, and if there is some sweeping tax law change, which we still expect sometime soon. Like we hope it's not retroactive, but they've done crazier things. So who knows what the impacts could be there. So, Jay also separately mentioned like when the DOGE team, they've indicated, right, that they're focused on fraud reduction. And when you're focused on fraud reduction, the way you do that, right, the way you reduce fraud is by increased scrutiny and increased audits. And so that's a thing that you also probably want to make sure that you alert your small business clients, your independent contractors, and of course people that are high income earners. Like this is a potential risk that comes out of that increased focus on fraud. Now, whether that actually happens, like is one of the biggest we'll sees that I can think of that we've talked about so far. But that is the way that you catch fraud, is by doing more investigation. So
Now,
um,
now keep in mind
we'll
though,
see.
if you are an American taxpayer and
Yeah.
you are married, you and your wife each get a W-2. You
Yeah.
have a mortgage, you have student loan interest, you have a 401k, and you have a health savings account. You are not going to get audited.
That's me, by
All
the
of your
way.
documents are sent to the IRS. Everything's going to match
That's
up.
right. Hopefully.
It's the threat 4 years ago was the IRS is sending armed agents to your house because you filed a fraudulent return. You did not. You got a W-2. You had nothing else to file. Yeah, yeah. Let's say you got a 1099 for $1 million, and then you built in all those expenses. That's another story. Make sure that you have the records to back up all of your expenses. And if that's the
Right.
case, you're fine. Go through the audit. Let them do it because you're going to come out there just fine.
Right. Absolutely. So, um, again, the better focus, making sure that you've got good records, like those are the most important things at this point in time as well. But that means that you need to make good decisions and be aware of what those impacts could be, right? Like that is very important. That also means that those are things that you need to communicate to your clients as well. So make sure that you're doing that. Um, I personally have like this as a taxpayer, like this is the thing that's on my mind. Like I don't have hesitation necessarily with e-filing because I'm not really worried about government accessing my sensitive data. Like that's already kind of there. I'm a realistic enough to know that it's already there. But I do have a concern that like some random people are maybe getting information around that, and it's maybe not as secure. And so those privacy concerns and the filing behavior that may go along with that are things to be on the watch out for taxpayers, right? And so if you think about your clients, you want to you you want to be that therapist to say like these are things you do need to worry about and things you maybe don't need to worry about. What do you think about that, Jay?
Yeah, I mean, e-filing, I'm not worried about it because I mean,
Yeah.
it's fairly safe. What they're digging into is the payment systems, and
Right.
honestly, you're not going to find the fraud in the IRS payment systems. All it's doing is
No.
paying what's coming through the other system, through the payment rails to the bank accounts that you have in there. So I
Right.
wouldn't worry about that. I think they're barking up a bad tree there. If I was looking for fraud, I'd be looking at the GSA and the GAO, the Government Services Administration and the Government Accounting Office. But
Yeah.
that's where you'll find the fraud and those contracts where they're the no bid contracts and things like that. I don't think it's in the IRS. Yes, there are fraudulent returns. There are people not reporting income, over reporting expenses. That's out there for sure. But that that's where the systems come into play, like we talked about earlier, to help detect that. Because a lot
Right.
of the income is already being reported. They're getting the 1099s, they're getting all the statements. So they have a good idea. They have, I mean, basically the last 5 years, they're sending letters out to businesses that basically, hey, based on your business, we expect you to have X dollars of cash or check business based on you know, uh, historical
Sure.
data.
Yeah. Operating trends or whatever.
And
Yeah. Right.
right, so like they know what you're going to have based on your business, and they're able to tell. So, you know, that's what we have to worry about as far as fraud and things like that. Is there too many people and overspending and waste? Yes, there is, but
Yeah.
it's not thousands and thousands of people. So do they need to look at it? Yes, they need to use a scalpel, not a hatchet, but it does need to be done regardless. And the
Right.
government itself everywhere is bloated, so it's understandable that we're going to go through this. But at least we need to know what is happening. We need to know why, the what's, the where, the who's, and the background. It's like I look at it this way. We advise businesses. We don't advise
Yeah.
governments. Governments run very different than a business. You can't take business principles and just apply it to the government. And that's where I think they're falling short. And, go in there do some studies, figure out what's going on, figure out who knows what the fuck is going on, and keep those people and, use them as the linchpin of getting things done. You can't just chop off, the heads of every department and just, figure it out, because it's not going to happen. And to me, by being short-sighted up front, it's going to cost 3 times as much on the back end. So, let's slow things down a little bit. Let's keep going, but let's slow it down a little bit.
Yeah, and I think that, Jay, we mentioned this also, right? One of the things that happens when you go so fast and you break things, right? Like, I think this is I heard this mentioned in it. I was like, oh, that's obviously what's happening. I can't believe I didn't think of that before, right? It's the Silicon Valley approach, right? Move fast and break things, right? That's what they're doing, right? As they're trying to go quickly, trying to bang through a bunch of stuff, make a bunch of change, but it just doesn't have the same impact. And an important thing that it creates is misinformation and confusion, because things happen so quickly. A lot of people are relying on that information or the data that's supported by government agencies, particularly the IRS, right? You're making payments based on the information that's there. And so uncertainty in both what's actually going on, as well as in tax law interpretation, like all of those types of things can lead to filing errors or increase the reliance on tax professionals to make sure that things are correct. So that's definitely a thing that I think we'll see expand and get worse before it gets better. But hopefully in the end, Jay, once the scalpel is figured out, maybe we'll get a good conclusion or come to a good conclusion. Now, that's the best case scenario. There are some other long-term impacts that I definitely think are going to happen, and Jay, you've kind of alluded to several of these too. One of them, of course, is that there's going to be increased taxpayer costs, be that in higher return costs, or in what you're talking about, Jay, in like 3 years' time, or maybe 2 administrations from now, when we have to build it all back up and pay triple the price. Like that's a taxpayer cost as well. So there's a lot of opportunities for problems or increased costs for taxpayers. There also, if there are specific inefficiencies or things that are identified by the DOGE team that need to be edited, like I'm interested to see how the DOGE report to Congress goes or something. I'm not even really sure what to expect there, because again, this isn't a thing that's been communicated very well. It's just like this cast of characters going around pillaging stuff. Like that's what it feels like a little bit. So are there going to be tax code revisions? Like, are they going to be like, hey, this particular thing doesn't make any sense, we should change it, we use this language instead? They use ChatGPT to like rewrite the tax code or something. Like, I think there's at least some uncertainty there.
Let's face it though. Yeah. During COVID, Congress showed that they too can't write tax code, because the PPP rules came out, and like, all right, let's determine this. Let's make determinations. Like, all right, well, you know what? No, that doesn't make sense. Let's do this. Oh wait, no, that doesn't make sense. And this was like every other week it was changing, and it's like finally they came out with new rules. It's like, oh wait, that's even worse than it was before. So they don't know what they're doing there either. So we gotta have experts that understand this and actually rewrite the tax code if that's the case, and take it from a book that's this deep to something like that. It's nice and simple.
Right. Let's hope that is what happens. Now, I think the longest term impact here is kind of the worst one, and it kind of seems like the intention all along. When you introduce misinformation, when you introduce confusion, when you highlight hey, everything's going poorly. Oh my gosh, can you believe how badly this is happening, right? The thing that you end up doing, whether that was intentional or not, is that you erode the trust in the IRS, right? And so the IRS might start to be seen as a politically influenced or just inefficient compliance entity, right? Of that, well, if it's not already, like if it, as if it wasn't bad enough already, like the that erosion of trust in the IRS is going to mean like that it's going to mean that people aren't going to want to call in. People eventually aren't going to even want to pay. Like there's all kinds of different things that will happen as a result of an erosion in trust in that system
Yep.
that is collecting funds, right? So um, I am not looking forward to that, but I'm certain that that is an outcome that is very, very likely. And so Jay, I don't know if you have any other thoughts on any long-term implications that we haven't talked about, but if you do, now's the time.
Yeah, so let's talk a little bit about what's going on here and potential impacts. So,
Okay.
the information I have here is a summary of what Chuck Reddig put out, which, if you're not familiar, he is the IRS commissioner previous to our boy Danny Werfel.
Yeah.
And
Former quarterback.
basically, the
Great quarterback.
IRS handles 4.9 trillion in income annually, which is 95% of the US's gross revenue. That's 4.9 trillion on a
It's a big
budget of
number.
14 billion. It's
It's really good
almost,
profits.
yeah, it's less than 1%. And
Yeah.
by reducing the cost is not going to impact the revenue collection. They're still going to need to collect all that revenue. So, I mean, it's not going
Yeah.
to affect it. It's going to impact it because now you're not going to have the enforcement in place. So, it's important that that budget is a fraction of what it's meant to handle.
Yeah.
And of that workforce, 10% of the IRS is made up of veterans or military veteran families. So it has a
Yeah.
major impact to families that have already served the U.S. and are very proud. And they join the IRS because they want to still serve their country. And it's important to do so.
Yeah.
So, let's not forget about that impact.
Yeah. It's a
And
big one.
yeah, for sure. I already mentioned the technological advancements that we've had over the last 2 years. We've put in tools that we would see in the private sector. The document upload and having access to your accounts online. They
Right.
some great stuff there. Um, but with that, you also have to have some human expertise because with this increased technology, you have specialized examiners that are trained to be handling these special complex circumstances that, like we talked about earlier, could trigger audits or not, and that could have a major impact. So
Yeah.
the IRS system is considered a voluntary system, even though, yes, they tell you how much you're going to pay, but it's still voluntary because the information, you are sending them their information, it's being matched. And by doing this, we're going to weaken that voluntary system. Like you said, there's going to be
Yeah.
less people that are going to voluntarily disclose their income and file their taxes. And that's just
Yeah.
not going to go well because
No.
there will be some sort of strife that's going to happen. And in the past, we've seen what happens when you go up against the government, and it
Mm.
doesn't go well. And
No.
then we also have the security that we talked about. So the IRS
Yeah.
is that nationwide watchdog that's looking over the economy and looking over our systems, looking for terrorism, fraud, and abuse. So there's so many things that touch it, and it's so important to the national security of the U.S. And it's important to all of us because you know we pay in to get services, whether it is from the federal government, the state government, local government. because a lot of that money does flow in from the federal government to the states and localities. So it is
Yeah.
so
Right.
important that this not get impacted. Now, I say all this, and we did have a great story a couple weeks ago where I was able to work out my issues, and I was great, and it came off of a letter that was basically, yeah, we need more time. Well, that was the third time they asked for more time, so it's like, let's get this done. And it was a simple issue that
Right.
the payroll company I was using didn't automatically check off a box on a form that created it. So
Right.
the person I spoke to was knowledgeable enough that they noticed what was going on. They were able to correct it and advise me what the issue was. So I was able to go back to the payroll provider that I was using and say, hey, in this situation, you need to be checking this box. So we
Right.
need things like that, because if that didn't happen, that payroll provider could still be doing that same issue. And they didn't correct it, and my issue was from 2021, so we're now in 2025, and now they're first fixing it. So it has
Yeah.
domino like effects. So let's keep things moving, and let's look at I hate saying this, but let's look at other government organizations to
Right. So parting thoughts here, right? Jay, you've summarized that really well. I think there are a couple main things. Be prepared for delay. Be prepared for confusion. Be prepared for uncertainty. If you're doing those types of things and you're making sure that you're agile and responsive to issues like that, you're going to be in good shape. And so that's the advice that I give today. That final thing, right, is stay agile. Be aware of what's going on. Make sure you're up to date and that you know what's going on, so that you can communicate that properly to your clients. And one of the easiest ways to do that, Jay, is by listening to us every week right here on Tuesdays. We're going to talk about those types of topics. We're going to highlight them for you. We're going to be right here giving our thoughts and giving you advice related to the best ways to communicate those things to your clients. Jay, I know I'm always interested in getting people's feedback on how they're dealing with these types of things and what they think about these types of things. So I'd love to see share your thoughts down there or wherever it is, right? Maybe click the button. Is there a button? There's probably not a button. Does that work that way? Not for comments,
there's a
right?
comment button, and there's a subscribe button. So subscribe,
Yeah.
and then click the bell to be notified, so that you know when we go live next week.
That's right.
At the same time, every Tuesday, 5
all the time.
I was going to say 5 a.m., 5 p.m. Eastern time.
Right. And so we'll be right here next week talking about whatever craziness comes up next. And then again, I mentioned we're going to change up the way we do this probably going forward. We're going to drop the news maybe in a blog post each week. So look out for that as well, so that you can catch up on all the wild stuff happening in AI, whatever kind of craziness the PCAOB is doing, and then of course any significant changes or updates that are coming out of the IRS. So thanks for spending the afternoon with us. We're excited to talk to you about these types of things, and love and look forward to doing it again next week. Jay, any parting thoughts from your side?
I just want to say that last week I was super excited. We had the Daytona 500 coming up, and I was super excited because Dale Earnhardt Jr.'s foray into Cup racing went very well. Ended up finishing 9th, and their sponsor, Traveler Whiskey. Thank you very much, Chris Stapleton. Perfect timing, finished it there. So
nice.
Yeah,
yes,
it was a great racing weekend. There was a lot of action. The results, I could live without some of the people that won, but you know what? My drivers did well. Wrecking, Ryan Blaney finished 7th. Alex Bowman led, and he finished 6th. And congratulations to Hendrick Motorsports for the 2nd win in a row. So
nice.
There you go.
Wonderful. Again,
Come
Thanks
talk
everybody
tax.
for hanging out with us. We'll see you
I was
next
going to
week.
say, come talk tax, get a NASCAR update. So
There you go. That's it. Come listen to Tax. Get your NASCAR updates, and then hear me make jokes about the PCAOB for as long as I still can. Thanks everybody. We'll see you on the next one.
Have a great week, everybody.
Bye.